How does a 9% yield sound along with maybe a potential 9% capital appreciation return this year if the market, say, for example, did 15%? In this video, we're gonna look at all the characteristics regarding ESPX, how it could potentially be a really special fund for Evolve, how it could be a flagship fund for them. In this video, we're going to break down everything at an intermediate level. We will kind of blitz through a lot of this just so we're not wasting time on everything. I've tabulated everything here at the top with all the PDFs, links that are related to the fund to give all of you a really good understanding of how to read these funds and research them for yourselves. One of the big things that has sort of enamored me with this fund, I'm not personally invested into it, but the fact that it looks like it can combine the best of both worlds, yield and capital appreciation. So this video, we're going to discuss exactly how it looks like that on the surface. And then towards the end, we'll kind of discuss why it's sort of not doing that. To be fair to Evolve ETFs, it is a newer fund. So if you go onto Evolve ETF's website and you go under products, you'll see ESPX is down over here. ESPX is designed to provide investors with the performance of the S&P 500 index with an additional enhanced yield through active cover call strategies on the underlying security. This fund invests primarily in equity constituents of the S&P 500 index, while writing cover call options on up to 33% of the portfolio. I really want to highlight that. That's I would say one of two really important questions when dealing with cover call ETFs is what is the coverage over the portfolio? What this number means is that the other 66% of the fund is able to participate in any upward trajectory of the market. So it gets 66% gets full participation. Put it to you this way, whatever the S&P 500 does, this fund should do 33% less of whatever that does. Okay. And then we got cover call options have the potential to provide extra income and help hedge long stock positions. So then down below here, we got the fact sheet overview, hungry for yield link, press release, cover call, ETFs 101, and the S&P 500 brochure, which are all links up here that I've already prepped. ETF series, this is the hedge to CAD. There's another version that is unhedged. What that simply means is ESPX, if it was unhedged, it would just mean that in the price fluctuation, there would be an additional fluctuation of the currency. So the price would also be affected, this price here would be affected by the fluctuation of the currency as well. So when it's hedged, it takes away that currency variance. Okay, and of course we just have some general information, the ticker, the net asset value, the market price, the style index based with the cover call overlay. It holds 500 companies. Another good little bit of information is right here. The size of the fund is $19 million, which is frankly on the lower end. It's more of it's a little bit of a concern. You would definitely want it to be higher. Then again, the fund is only 3 months old, so I will give it a break there. And then, of course, that juicy 9% yield. Okay, and then we come down here, we have geographical location, United States, and we have the sector allocation. So you'll see here just a big giant breakdown of everything that the S&P 500 invests in. There is this one section here, this fund, it invests in other funds. We're going to get to that in a moment. Now, it also includes this management fee of 0.45%. Most cover calls that I've seen in Canada, ETFs related, that is, cover call ETFs, have about maybe in the 0.6 to 0.7 range, but that's usually on a much greater coverage, like say 50% and greater. Let's go to performance. Performance is not available as the fund has not completed a full year of performance. And we see with its distributions that it's been paying 15.5 cents over the last couple of months. Now, if you average this out for the rest of the year, you're going to get the 9%. So if nothing changes, this distribution stays the same monthly, we will get 9%. Okay, and then documents, again, prospectus, again, very important to read through all of these links, but we're going to go through all of them up here. So anything that is linked down here, we're going to check it out up here. So that gave us some pretty generic information about the fund. Let's get into the first link. So this actually has a couple of interesting charts that we'll kind of go over. The S&P 500 is widely regarded as the best single gauge of U.S. large cap equities. The index includes 500 leading companies spanning all sectors of the U.S. market. It covers approximately 80% of the U.S. equity market capitalization and over 50% of the global market. So it's just basically saying, like, you know, the S&P 500 is a really important index. Most fund managers and just retail investors love to compare their portfolios against the S&P 500. It is the granddaddy of comparisons against whether you are doing good against the market or not. There was a couple of charts in here I thought were kind of interesting, not necessarily cover call related, but this one showed percentage of U.S. active large cap domestic equity funds underperforming the S&P 500. So it dates back all the way to 2001. So this is active fund managers underperformance every single year. Okay. So we got a couple of really high years and only a couple of years where the majority of active fund managers outperformed the market. And then we can see year to date here in 2023, the underperformance is just barely. And then we got this kind of little interesting one here. Manager outperformance is fleeting. So this blue graph represents the cumulative chance of picking a heart in a deck of cards, which is 25%, picking a heart. Okay, and then we have next beside it, basically it's saying active funds that stay in the top quartile, meaning your fund, say, it's in the top 20% of funds. I guess that's based on the average per year. Is that you're basically going to be in the top, call it 20%. And the chances of it being 2 years in a row, you can see that the chances of picking, say, a heart twice in a row is 6.5%, but outperforming the market or active fund managers staying in the top quartile, like basically staying in the top 20%, is virtually zero. Now, we also recognize that we were in the bull market of 2021, and by 2022, we're in a quite different market, a bear market of 2022. So this is has some interesting charts, but it just goes on to say how important, why the S&P 500 is as important as it is. Okay, we'll move on to the next link. So on this page, we can see that the top holding is this iShare Core S&P 500 ETF, 36% IVV. So what I think is going on here for those who maybe are either baffled or don't know, like, why would this S&P 500 ETF with its cover call overlay invest in a plain vanilla S&P 500 ETF? I believe it's because they're using this ETF to write their call options with. Right, just to simplify the process within the fund, and then the rest of the fund are just shares that the fund has basically bought, and they're just letting it do its thing. And there really is just a systematic approach to everything else in the fund, minus the cover call overlay on the 33% within here. So we'll move back over into cover call ETFs 101. If you're unfamiliar with cover calls and you're interested in this fund, then be sure to make this one of your first stops, as it gives you some really good information about what cover calls are, what the benefits are, what is an option, how is it involved inside this ETF. Then we have some charts that show what an Evolve ETF with its cover call overlay of 30% against, say, a cover call with 100% overlay would do against each other. Now, we're going to actually, at the end, closer to the end of the video, I'm going to share the performance of what this actually looks like in real time, year to date. So have no fear, we're going to actually, I'll I'll put some teeth on this and show you all what this actually will look like in real time. Now this part was actually really important. This answers the second question, that when I'm looking at cover call ETFs, I'm looking at coverage. How much of the cover call overlay is there on the fund? And the other one, okay, so we got 33% right there. But the next one is we typically write 2 to 5% out of the money, but not limited to that range. That's the next question I want to know, because typically if it's out of the money, there's less premium generated. When it's at the money, there is more premium being generated for your monthly income. They typically write 1 month call options on the fund. They also go into other variables that they bring into the equation. They bounce that percentage around 33%. Sometimes it could be a lot less, but no more than 33%. Okay, so for that section, that's all that really matters there. All this is really saying is that all of this gets rebalanced, meaning the percentages slightly change every single quarter. Okay, so even the fund within the fund its weighting will change, only so slightly. Okay, so not much more to share there. This is the prospectus. It's 82 pages worth of prospectus. So we are not going to be going through legal jargon or defining what certain terminologies are. I think if you're going to visit the site, I think what most average people are going to be focused on when going through this glossary is probably page 28, is income tax considerations and all of the subpages that relate to income taxes. Okay, but certainly, as always, give it a read. Make sure you're well informed with how these funds operate. But I'm just saying, for the broader audience, I think for the most part, it's going to be tax implications that people are going to want to know about. Nothing else really to point out here, although there might be some questions regarding all these different tickers. Now, ESPX is the one we're reviewing. This is the unhedged version, and these are the two are mutual funds. Now we're looking at fun facts, and really of all these 6 pages, it's the risk rating that just kind of pops out to me. It's medium. It falls kind of in line with a lot of just cover call ETFs in Canada. Medium is usually where it is. I mean, unless it's some crazy cover call where it shorts something and maybe involves some other complex strategies, then I'm sure we'd see that more in this range over here. But with a fairly plain vanilla cover call strategy over it, it's gonna land most of the time, I would think, in the medium section. This is kind of interesting. Hungry for yield. This is the hungry for yield section, which is right here. And basically this gives you just a sort of a quick overview of all the funds that Evolve offers, their management fees, the different tickers that they offer, the distribution frequency, asset class, weighting, so that this gives you a really nice sort of general overview of everything Evolve has to offer. Okay, so now that that's been said, let's actually look at a good example of what I promised at the first part of the video, where I said that it offers awesome yield and offers what potentially could be a really great return. It should be performing fairly close to what the S&P 500 is actually doing. So without further ado, let's actually look at that. Okay, so right now we're looking at, we're on Seeking Alpha. We're going to be comparing each of these bunch of funds against its principled benchmark, which is the S&P 500. So ESPX versus its benchmark that it's tracking versus XYLD, which is a 100% at the money cover call ETF with 100% coverage over the entire portfolio. And as you can see here, just based on price performance alone, we're going to get into total return in a little bit. Throughout the entire time, ESPX has kind of been lagging both of them. Now, in my mind, it should be easily outpacing XYLD. XYLD shouldn't be keeping up with this thing, mainly because the higher the cover call coverage on an ETF like this drags the price. So the price really shouldn't be doing anything. And as of filming this on April 24th, we can see that XYLD takes a bit of a dip, but that's because it's the ex-dividend date for it. So it's basically declaring its distribution. So on these dates, it adjusts for price, and this is actually this is a normal thing for that to happen. So ESPX gets a little bit of a break today on the day of filming, and it looks like ESPX looks like it's doing a lot better than it normally is. But if we look at the history over this past few months, XYLD has been consistently outperforming up until maybe the last few weeks or so, when it's been performing just about the same as ESPX. But as I said earlier, compared to the S&P 500, it should be doing the S&P 500 minus 33%. So what's 8.1% minus 33%? What would that number be? It would be roughly about 5.39. So it should be somewhere in the middle here. Okay, but that's just off of just an observation. Now, I'm sure there's lots of other stuff going on behind the scenes inside the portfolio that, of course, that I probably don't even know about, but that's where it should be. Okay, but for the keen people out there, there might be some people that maybe say, Jordan, it's not necessarily fair to compare it right up against the benchmark itself. After all, ESPX is hedged to CAD, meaning that the currency is taken out of the equation. I got you covered. So I couldn't directly compare, but if we look at this, look at where the S&P 500 is, okay? And I'm going to give you a Canadian ETF that's hedged to CAD that does not have a cover call overlay, and we'll see how that one's performing. So this one is VSPC. Let's just refresh. And we'll go year to date, and it is performing, would you look at that, 8.09, right in line with, just a little bit less than the benchmark it's compared against. But nonetheless, ESPX, in my mind, should be performing price-wise better than that. Okay, so now we'll move over into total return, meaning now we're taking the distributions, dividends into consideration. You can flip-flop those terminologies around. It's really distributions, but I know many people there like to just call them dividends. They're not, but we can use that word too if you like. Okay, year to date, we can see that both XYLD and ESPX get a bit of a boost because of their dividends. XYLD, again, taking a bit of a dip because of the ex-dividend date and having to declare that. But nonetheless, ESPX is still nowhere close, even with the total return. So that being said, and if we move over into just another item to keep in mind of, this fund is, along with its small $19 million fund size, it also, the volume that it trades at is also pretty low. So that just simply means that when you go to buy it, say through Wealthsimple, you could potentially end up paying more because it's just not, the liquidity isn't quite as high. That's what that typically means. Okay, so now that we're done the fund overview here, hopefully you all tracked with me and understood what I was trying to communicate here. If you liked what you see, then please, by all means, let your comments be known down below. There will be a link in the description if you want to check out this fund for yourself. I think just overall, final thoughts, it's still a really intriguing fund. I want to give it more time to mature, see what it actually does for the rest of the year. I really hope that this fund offers some competitiveness for some of the top cover call ETFs in the country, and if it can do so, then I will seriously give it some good consideration whether I invest in it or not. But for now, I'm just gonna wait on the sidelines, just see what it does. But I'm really hoping, and I am actually going to cheer for it, that it does what I have communicated in this video to my initial understanding that it would do, but only time will tell. So with that being said, again, smash all the buttons of the like and subscribe variety. Hopefully you enjoyed this, and I will see you all in the next video.